So under this topic, we'll be looking at petroleum profit tax, which is called PPT. And under this topic, there are some aspects you have to be able to calculate on your own when working on PPT. I will not be going to theory, so you must have done theory, or you can read up the theory by yourself. We have just like 1 or 2 hours to solve this question, and then do some revision on the aspect you know before. Now, under this, you'll be given standard price, and then you'll be given the actual price of the gas, and also you'll be having the load factors, and you'll be having gas factor as well. So this question is a complete question. So if you look at it from first to the end, it has every element. So it has every element that you may think of under PPT from 1 to the end. So what I will need to do now is just to solve the question, and from there you will get every hint you have to get. So I'm going to read, or if you have someone that can read for us under 10 minutes or 5 minutes, you can volunteer to read the question for us so that everybody will follow or be on the same page. So if you want to volunteer to read the question for us, you can.
God bless. Okay. Good evening, everybody.
Okay. Do you want to help us with that?
Yes, I want to.
Okay. Thank you.
Global Oil and Gas Limited commenced crude oil production in January 2009. The company has provided the following financial report in respect of its operation for the accounting year ended December 31st, 2018. All figures given as below.
Okay.
Additional information. 1. The API of exported crude was, is that 30%?
No, that's not 30%. That's just 30.
Okay. The API of the exported, okay. The API of the exported crude was 30 degrees. The standard API gravity was agreed at 45 degrees. There is a $0.5 abatement for each degree fall in API gravity. Posted price for crude oil export average $52 per barrel at an exchange rate of 306 naira to $1. 2. Included in other income was 76 million naira derived from transportation of crude oil to the refinery. Related expenses, which amounts to 32,500,000, was included in operation costs. 3. The company entered into natural gas contract with Ajip Limited. The value of the contract was 1,310,000,000 naira, and the load factor of the gas was 54 degrees. 500,000 was included in production costs. The schedule of qualifying capital expenditure acquired during the year is as follows. We have the date of acquisition, location, and amount as given below. Then 6. The unutilized portion of capital allowance brought forward from last year was agreed at 57,400,000 naira, while the agreed capital allowance for the year was 177 million naira. 7. Included in management and administrative expenses was 7 million naira paid on stamp duty for the venture issued and obtained by the company. 8. Specific bad debts written off amounted to 79 million naira. 9. The amount of donation was expended only exclusively and necessarily for the company's petroleum operation. 10. A sum of 25 million naira paid to another company to retrieve information relating to the existence of petroleum in the Chad Basin region of Nigeria was included in miscellaneous expenses. 11. Interest paid included 41 million naira, which was paid to an associated company. The loan was obtained at market rate. As a result of the need to meet up with the return deadline on payment of petroleum profit tax, the 13th installment has been very urgent. The management of the company has engaged a firm of chartered accountants as tax consultant to the company. Required. As the desk officer in charge of petroleum profit tax matter in the accounting firm, the principal partner has directed you to work on the file of Global Oil and Gas Limited. Specifically, you are to prepare and submit reports on the following computations: assessable profit, chargeable profit, chargeable tax, and total tax payable.
Okay, so thank you very much. So this is a standard question, and this type of question, you will see it as question 1 if they want to test it as question 1. So by the time you check the last year advance tax, I think it was under Pioneer or something, or company income tax. So they do rotate it. If they test company income tax this year as a compulsory question, the next year they might change it to PPT. The upper one, they change it to another, but there are some standard questions that always come as 30 marks question, which is compulsory under this PPT. So we are going to solution straight away. So let's say solution. So under this, we have workings, or before workings. The name of the company is Global Oil and Gas Limited. Okay, so we'll be solving this one after the other, and I will use the illustration to explain some vital points which you need to know. Okay, so we are going to start with workings, and after the workings, we go to the main question. Okay, so the first thing to do is to calculate our adjusted profit. They said accessible profit, but to get this accessible profit, we have to calculate our adjusted profit first. So we are going to say number 1 is to calculate adjusted profit. Fine. So to calculate adjusted posted price. Say. So to get our adjusted posted price, we need to go back to what we have as the first note, one after the other. So they said the API of exported crude was 30 degrees. Just a minute. So it was 30 degrees. The standard API gravity was agreed at 45 degrees. That is the first one. Now, if this is a standard, then it means 30 degrees is the actual. So we have two. We have standard and we have actual. The plan to be 45, but it was 30 degrees. That is first aspect. There is a $0.5 abatement for each degree fall. So we are going to find the difference in the degree. So whatever degrees we have as a difference will be multiplied by this $0.5. That's what this question is saying. API gravity. Now, posted price for crude oil exported average was 52 per dollar, per barrel. What we are saying here is that we have to convert this dollar to naira. We have the dollar rate already, which we are going to convert, because this amount we are looking at here, they are all in naira currency. So we need to convert all these figures in dollar to naira. So the first thing to do now is to start. Don't forget, the standard API here is 45 degrees, while the actual is 30 degrees. So we'll come here and we say standard API is 45 degrees. Then the actual API is 30 degrees. So let me leave enough space. Okay, fine. So if the actual, they plan to use 45 and they later use this 30, or they plan to have API of 45 degrees, but the actual API they have is 30 degrees. What would be the difference? The difference will be 15% or 15 degrees. How do we get the 15 degree? It was 20, it was planned to be 45. Now the result was 30. So there's a difference of 15 degrees from their plan. So that is 15 degrees. And according to the question, they said for every 4 in degree, there is a $0.5 abatement for each degree that falls. So all we have to do now is to adjust for the factor. So we are coming back here. So we are going to say adjustment. So if there's any question as we move on, just let me know. So adjustment factor will be this particular figure we have, then multiplied by the dollar. Said is 0.5. So if you multiply the 15 times 0.5, what do we get? You need your calculator in this class. What do we get for the difference of these two?
7.5.
That would be what?
7.5.
Okay, 7.5. So we have 7.5 as the dollar after multiplying with the difference according to the instruction given to us. So it means it's going to give us negative 7.5 from that question. And that is what we have here. So the next thing to do now, after this, I think network is back. Please. So we have 7.5 as the difference in falling of that API. So what do we need to do now? So we need to find what is the posted price given to us in the question. So posted price given to us from that question was, let's go back there to see. So the posted price was $52 per barrel. So they said posted price for crude oil exported average $52 per barrel. So we need that $52 per barrel now. So we say this 52 per barrel. So we are going to find the difference between this and this. So by the time you find the difference, what do we have? So whatever we get is what we call our adjusted posted price. That is APP. So what do you get now? 52 minus 7.5. What are we going to?
44.5.
Okay, 44.5. So 44.5. That is the adjusted posted price. Any question with that before we move on? And that is the first thing we need to do with this first note 1. And that is first thing we need to do with this note 1, which we have done here now. Now, this is what we are trying to get from this question. What happened is this. This company okay, so let's continue. Okay, so what I'm trying to say is that this company sold petrol or crude oil to both external and foreign, that is export and local. So we don't have any problem with the one of local because it's in Nigeria value already or currency. But we need to calculate this one of foreign, which is export, which is 380,000 barrels. And that is why we need to adjust for this API we have here to actually know the figure we are going to make use of. So when we get to that point, I'll be telling you which of the figure we are going to pick. Is it the one we are going to calculate or the figure we have in the question? So by the time you see, we are going to be having 5.7 and the other one we are going to be calculating very soon when we get to that point. But that is not the next thing now. Let's look at the next note. Let's look at the next note. The next note is talking about included. Okay, so included in other income. So included in other income was 76,000 derived from transportation. So on this one, there's no calculation or workings. We just adjust it directly. Then the next one, the company entered into natural gas contract with Agip Limited. And the value of contract was this figure 1.3, and the load factor was 54. This network is affecting us here tonight, but we are going to try as much as possible to manage it. Okay, so we are working on note 3 now, which is talking about load factor. So to calculate your load factor, I'll be giving you the information about that shortly. So which is going to be note 3. There's nothing on note 2. So we'll call this one, or let's call it workings 2 on note 3. So here, I believe you must have done load factors, but if you have not done that, no problem. We are going to work on that shortly. So we have chargeable value of gas. We've calculated the one of crude oil. So we want to calculate the one of gas now. which is the same thing as VOC, then GAS, as a short form of what we have done, in case you see it in any of textbook or paper. Now, here, I'm going to give you this information you need on load factor. Okay, so we have load factor and we also have gas factor. Which is fine. So under this now, we have 50 degree, we have 60 degree, we have 70 degree, we have 80 degree. This formula is what you need to know, what you need to study before you enter your examination hall. Because nobody will tell you and they will not give you this in your examination. Why the one of gas factor? You start from the highest to the lowest. Sorry. We start from the highest to the lowest. Then the other one we start from the lowest to the higher. So which is 50 to 80. Then this one will come down. Sorry. So this will be next figure. 15.5. Then the next one will be 14.3. You just have to know this formula. Then the next one will be 13.6. 13.6. Okay, so once you know this formula, it means you are almost there. Now, there's another short formula I'm going to give you anytime you want to calculate it. So the formula is now it's going to be for gas factor. So we are going to be having upper load factor. I'm going to explain that, divided by, I'm looking at how it will be possible. So divided by upper load factor. So let me put this into brackets so that it will be clear on what I'm trying to explain. So I put this 2 into brackets, then minus this 2 we have calculated, then given load factor divided by given load factor and then the lower factor of this. So I'm going to put these 2 in bracket as well. So with this, you are good to solve any question under load factor. So what do you mean to do now, or what are you expected to do now? It's very simple. Let's go back to that question. After you have gotten all the necessary information, let's go back to the question. The given factor, let's see in note 3, they said the company enter into natural gas contract with Agip Limited. The value of the contract was 1.3 and the load factor. So they gave us load factor to be for 54 degree. 54 degree. Let's come back to that formula. What the formula is saying is that upper load factor, the 54 degree will fall within this area. Let me use the arrow. So that 54 degrees will fall in this area. Let me draw it up to this. So this is where it's going to fall, right? So we have the upper and the lower. So in this case now, the first formula, based on this formula, the formula says we should pick upper load factor. Upper load factor. What would be the upper load factor in this question? Can anyone help us with that? What would be upper load factor in this question? If they are following,
50.
that would be 50, right? That would be upper.
Yes.
So 50 here, then divided by upper factor. So what would that be?
16.9.
Which is the given upper factor, sorry.
Okay. So given
Which is given upper factor. So given upper factor is what? Or given factor. The given factor will be 54,
well,
right?
yeah, 54.
Then we also have another one. It's like this formula is confusing. Let me put it in another way that will make sense and easier to understand. I understand that topic. I mean, that formula is giving some. So we have upper factor, upper load factor, divided by, let me put it in format, because this is where the secret is. You must be able to get the formula correct. So upper load factor here, then divided by upper load factor as well. So that will be divided. Then we have minus. So the other one would be giving factor. Then this also will be minus the lower factor. So I think this will give some, this is giving gas factor, and this also lower gas factor. So I want to make that formula to make sense so that when you see it, it will be easier for you to pick up and you'll be fine with it. Okay, so I think it's better now. So we should be able to go with this now. So from here now, we have that 50, as you have said, then divided by the upper load factor again, which we have. It means this will be divided by 50 again, according to that formula. Okay, so what is our given gas factor? We are having something of this, which is not known to us, but we are having the upper gas factor. The upper gas factor here is 16.9 based on what you are seeing here. Then here also, we are going to bring it down as minus. The same thing will be repeated here. Giving factor, and also the lower factor here will be 60, as we have on the question, which is 60. This is upper factor, this is lower factor. and the given factor from that question was 54, and then the upper one is 60. So we repeat the same thing at the front of this now. So I'm going to write another one to show the other legs formula. So I want to copy the same thing to this side to make my work easier. Okay. So this will now be gas aspect. This also will be gas aspect. Then this also will be giving gas factor, like what I have done before. I'm trying to arrange it in a way that will be easier for you to pick when you need it. And this is gas. This is also gas as well. While this one will be for load, giving load factor. And this will also be lower load factor. Okay, so I think we are fine now. Let me close this and this also to close it. Okay, fine. So I think we are good to go now with this. Now I will re-explain what I've done. So based on this formula now, the upper load factor is 50. Then the upper load factor again divided by upper load factor is the same thing as 50, which is this. Let me close the gap. Okay, the given load factor. What was the load factor given to us from the question? The load factor given to us was 54 degrees. So we have to pick the load factor given to us, which is 54 degrees. Now the next one says lower load factor. So this is still load factor, not land, it's load. So this is load factor. The load factor, this is the line given to us. So 60 degrees is the load factor, which is the lower. So we take this 60. Then we calculate the other aspect of the question using that same formula. What is the upper gas given to us? The upper gas given to us will be the one that is facing 60 degrees from here. So what is facing 60 degrees? That is 16.9. So we have 16.9, then minus, based on this formula, what is our giving factor? The giving factor here, they didn't give us anything of giving of the factor of gas factor. So we are going to represent with X or any letter. Then after that, the next aspect of this is talking about upper gas factor. The upper gas factor still remains 16.9 from this question. Then the second one is talking about lower gas factor. Then we go back here. What is our lower gas factor? Which is 15.5. So I will say 15.5. Do we have any question concerning this before I move on? I know that that formula aspect actually stopped us because I want to arrange it properly. I think it's now well arranged now. This makes sense now. So what else? Do you have any question you want to ask based on what we have done so far now before we continue from this aspect? Okay, so no question. So let's continue. So we have the upper load and the lower load together. So I'm going to need your calculator now. All we have to do now is to divide it. So 50 minus 54 divided by 10. So 4 divided by 10, what do we have? 4 divided by 10, what do we have?
0.4.
0.4. Okay. Then how about the second one? The second one is 16.9 minus 15.5. What do we get?
1.4.
So this one will still remain 16.9 x, which is minus x. Then everything will be divided by whatever we get, which is what do we call that figure again? 16. That will be
1.4.
1.4. Okay, thank you. So from here, what do we need to do? We want to look for the value of this x. And how do we solve that? So we just cross multiply from here. So we have 6.9 minus x. And this is a figure here. So all we want to do now is to get the value of x. And to calculate the value of x, we need to cross multiply. So I'm using this as a tool for our cross multiplication. I'm going to use the second one as the same thing. So all we have to do from here now is to multiply it together. So it means it's 0.4 times 1.4. So it means it's 0.4 times 1.4. Then equals to 16.9 minus x. So what are we going to have next? If you multiply 0.4 times 1.4, what do we get?
0.56.
So 0.56 equals to 16.9 minus x. Minus x. So from this aspect now, where we are now, what do we need to do? So we want to find the value of x, right? So to find the value of x, all we need to do is to move this to the other side. So it means we collect the like time. So x equals to 16.9, then minus 0.56. And what is the value of x? What is the value of x?
16.34.
To 16.34. So this will be in percentage. So we are going to leave it in our percentage. So we leave the answer in percentage. So that is the figure we'll be making use of. Now, based on what I said before, I showed you the gas value, and we are going to calculate another value now. So this value we are going to calculate now is going to be sales proceed on this gas. So we are going back to see that figure. Then we are going to less will be lessing gas adjusted profit or adjusted figure or factor. Okay, so let's go back and see that figure of proceed. Let's go back to that question and let us see. So from that note 3 that we just finished now, we were given this to be the value of that gas. So value of the gas is 131. So we're coming back here. So the proceed here is 1310, then 00, another 00. So what is our gas factor we have there? Based on that question, we'll be having, I need to expand this. This is fine. So based on this now, we'll be having the figure we just concluded, which is 16.34%. Then multiply by this 1300. So we want to adjust for that figure. So what do we have if you multiply that together? 16.34% of this figure. What do we have? 16.34% multiplied by this figure. What would be our answer? Then we less it from what we have on ground. We still have long journey to go. We have to be pressing our calculator so that we can complete the question. Anyone in the class? So I'm pressing my calculator from here. 16.34% times 1.3. Here I'm having 214,054 and 00. So please, you can check your calculator as well. That is load aspects of it, which is the gas aspect we calculated. So if we less it from that, so we are going to get the value of gas sold. Value of gas sold, which we are going to calculate later. So we have to start with this calculation, and after the workings, we can start to compile the tax together or the other information together. So if you less it from the main sales proceed, what do we have? So we are having 109 from my calculator here, 1095, 1095. I'm having 946, then is 00. So that is what I have from my calculator here. That is note 3 we just finished. I believe this load factor aspect is clear to you. So let's go to the next one, note 4. The note 4 here is talking about depreciation of assets, which amounted to 240, which was included in production cost. So when we get to that production cost, we do the adjustments necessary on that. Then the schedule of qualifying capital expenditure acquired during the year is as follows. Now, looking at this, we have procedure to follow when you are calculating capital allowance. In this case, we have two things to calculate for. We have the annual allowance and we have the petroleum investment allowance. For the annual allowance, it's always 20% all through. Every asset will be 20%. And when you are calculating for PIA, that is petroleum investment allowance, that will be 5%. So to calculate that, we have to come back here. I think we should use a table to make our work well arranged. Now, so in this case, we are going to have year of the asset. And we are also going to have the name or description of the asset. So we can call it asset. Then under this as well, we can have the location of the asset as given to us in the question. Then also, after the location, we can have the amount of the assets, and we can have the depreciation, the annual allowance at 20%, as I've said. Then we have the PIA at 5%, as I've explained. So from this case now, let's look at the first one. They gave us year of the first asset to be 2018. They said March 2018 and onshore. So I'm going to explain of onshore, 130 deep, 250 deep, and the other aspect of fish. So you need information on that. When we get there, I will explain on that, but we need to arrange this first. So 12 March is the date. So let's call this one 2018. And the name of the asset again is storage facility. Storage facility. The location of that asset is onshore. And the amount, what is the amount again? The amount is said to be 444. So I'll just pick this figure straight away to make my work easier. Okay. Which is fine. Then what we have to do now is to calculate our 20% on it. Now for onshore, there's a percentage on onshore. That is 5%. It's always onshore. Onshore is always 5%. And the next one will be 10%. The next one that will follow will also be 20 with 15% and 20% in such a way. So let's look at it. So what is 20% of 447? 20% of 447. If you are still with your calculator. So I'm having 894. Okay.
Okay.
Which is 89400, right? Then we have the remaining
Yes.
1,000 to it. What is 5% of 447? 5%.
Two, two, 350,000.
22,
Mhm.
360,
Yes, 350.
350.
350,000.
Okay, so fine. So we have 22, 350,000, which is fine. Now the next one, let's look at the next asset. This calculation is always 30 marks if they want to test it. So we have plants and equipment, 2018 as the same thing. So I'm going to put PPE and 2018. So I have 2018 and I have PPE. So the location now, the location here from the question is said to be 130 deep. So 130 deep. So we are going to put 130 here. So 130, that is the location deep. Then the amount. What is the amount of that figure? We have 150 million. 150 million. So we just have to do this vital calculation before we start going into posting of this item. So 150 million is what we have. Then let's pick all the assets once and for all. We have another one to be 2018 again, which is pipeline 250. So pipeline 2018. So still 2018 and it's pipeline. Then the dip is 250. So go back to check. So let's go back to see 250. Then the price is 220. 220. So the price is 220,000. Okay, so let's multiply the 20% on that. What do we get? If we use 20% on that, what do we get?
30 million.
30 million.
Yes.
Okay, so 30 million. So we have 30 million as 20% for annual. So use another 20 million for that second one. I mean, another 20% for the second one. What do we get?
And 44 million.
44 million. So 44 million. So how about this? What are you going to use for this? Use 10% for this 150. What is 10% of this 150? Or 5%? What are you going to use? Have you done anything on this PPE before? I mean, PPT before? Have you done anything on this before? So which percentage are we supposed to use now?
5%.
5%?
I was thinking so.
There's a formula to use when we are calculating on this particular investment allowance under this topic. Use 20% and let's see. I mean 50%. What is 50% of 30,000? Then 20% on the second one. So it's all after 5% for onshore, we have 10%, we have 50%, and we have 20% for the next one. So for this one now, It depends on the dip. This is the factors that will determine which percentage are you going to use. Are you getting what I'm saying now? So this is 130. This is 250. So we have a range that we are going to use from 1 to 100, or from 100 to 200, then from 200 to 300. So under this now, what are we going supposed to use? Like I said, just multiply this by 10. What do you get? That solves the problem.
It is 10% going on the 30 million or on 150.
150. What do we get?
We have 15 million.
50 million.
Yes.
Okay, so we just come here. I will put our 50 million, if that is what you said you have. So how about the second one? This is between, what percentage do you use for this one? 10 or 15? For this second one, what percentage do you use?
15. I think 15.
Do you use 15? Not 15, no. Is it 15 you use? Hello?
No, I use 15.
Okay, let me write it out for you to get what I'm trying to say. Look at it here. For the allowance, and for allowance, which is annual allowance. Let me call it annual allowance. For the annual allowance, it's supposed to be 20% all through. Let me give that hint here. Okay. Then for the petroleum investment allowance, it's supposed to be onshore. Onshore is 5%. Okay. Now, any dip from 0, let me put it dip from 0 to 100. So it is what? It's going to be 10% offshore. So it's going to be 10%. Are you getting that now? That's what I'm trying to explain. This one is onshore. This one is offshore. Then another dip from 101 to 200 meter. This one is also meter offshore. All these are offshore. We'll be having 15%. So I believe it's clear, it's getting better now. Then from 202, or let's say from 201, or from 201 deep and above, offshore, is going to give us, we are going to make use of 20%. Are we getting that now? I believe this one will help now. Now let's come back here now. This is our factor now. From 130 deep, where does it fall? It falls on 15%. right? Are we right? So that would be 50%
Yes.
multiplied by 150. What do we get? 50% multiplied by 150. What do we get?
That's 22,500,000.
22,500,000. Now, let's look at the second one. This falls into 250 deep. 250 deep is above it. So which means we are using 20% now in this case, right? So that will be
Yes.
giving us 20% multiplied by 22 or 220. What do we get?
44 million.
So that gives us 44 million. That gives us 44 million. Now let's total our annual allowance together and our petroleum investment allowance together. So 8, 9, 30, 44. So if we sum them together, what do we get? And the other one also, if we sum it together, what do we get? So 8, 9, 400, 30 million, and 44 million.
968 million.
For which one?
For AA.
What number is it?
968.
168.
968. 968.
Yes, 968. Is that all you have?
Yes.
Okay, what about the second one? Let me also try to add it together here to make the work faster. We have 3,000, 30,000 plus 44,000.
Um,
So I'm having 163. 163,
163.
yes, 163, 400, then 1,000. So for the other one, I have 22, 350 plus 22, 500 plus 44,000. I'm having 888 here. 88, 50,000. So it will be 1,000 here. Okay, so I think we are good to go with this now. So this is our investment allowance, and this is our annual allowance. When we get to where we are going to make use of that, we will use it. So let's go back to our notes. So we have solved another note from that question. This is a standard question that you should be expecting in your examination, not just any question, but a standard question. Okay, so we are done with that. Note 5 now. They said the utilized portion of capital allowance brought forward from last year was agreed at this figure. So no issue with it. We just adjust for it right there. Then included the management and administrative expenses was 7 million paid on stamp duty. When we get there, we conclude that as well. The specific bad debt written off amounted to 79. So we adjust to that when we get there. Then the amount of donation was expended only, exclusively, and necessarily. So it means this is the one that is accepted. So when we get there, we are going to treat it as well. A sum of 25 million paid to another company to retrieve information. No issue. When we get there, we are going to adjust that. Then note 11, interest paid included 41, which was paid to an associate company, or associated company, the loan was obtained at market rate. No issue. Now, as a result of the need to meet up with the return deadline of payment of petroleum profit tax, the 13th installment has become very urgent. So you must know there are 13 installments. So please go and read up on that aspect. It's very, very important on that area. So I'm not sure there's any other thing to calculate here, which we have not done. So when we get to where we're supposed to do that, we will adjust it in that area. So let's go to the next aspect of it. I think we are yet to get our export sales. We have gotten every other aspect except the export sales. So let's call this one another note, export sales. Export sales. Now, to get our export sales now, we need higher of these two things we want to calculate. So the first thing is that the first aspect of this revenue was given in the question to be a particular figure. Let's check our export sales. So I mentioned that when we started. So this is the export, and this is the figure given to us. Let's pick that figure. And put it here. So this is our revenue or sales. Let's say export sales. Then there's another one we need to compare. Now it's going to be higher of the two. So we have A, and the second one, based on our calculation, we have the actual sales based on our calculation to be how many barrels do we have in that question? They sold 380 barrels of crude oil. So we are coming back there to pick that. So we have 380,000 barrels. 380,000 barrels. That's what they sell. She's fine. Now, another thing is that based on our new adjustment, what is the first question we calculated? What is our API here? So this figure now, adjusted profit, is what we are going to make use of now. This is why we have done the whole calculation in the first place. So we want to know how much is the price of a barrel. You know, this is at these figures are in dollars, which is the export aspect of it. So we have 44.5. So just come here, 44. Let me put it in the dollar. 44.5. Then multiply by what is the dollar rate based on the notes given to us. The dollar rate is 306 to $1. So it means 44.5 multiplied by 306. Will give us the total figure we need as the sales for this figure. So let's multiply, please. What do we get if you multiply the figures together? So that will be giving us 380 times 44.5 times 306. What do you get? Are you there?
Okay.
Okay,
Five
so
one six.
5 what?
Okay. Let me just see guys. Look at that.
Okay, so let us check it.
Okay. 5 1
5 1
5 7 4
5
7 4
7 eh?
4.
7 4. Okay,
Then 460,000.
460,000. Okay, so we have two figures now. We have two figures from here, and the rule says we should pick higher of the two. So which one are we picking? We are picking the one of 5.7. So by the time we start with our computation, we are going to make use of the higher of the two. So do you have any question so far based on what you have done so that we can start to compute together? So we should be able to do that under 30 minutes at max. If there's any other question before we start the computation. So all I just want you to know, every item is very important of that calculation or working, which you need to know when you are going for exam under this PPC. So you must know how to calculate these allowances, which you are going to make use of, and you must know how to calculate the gas value, which you have done. Then you must also know how to calculate your gas factors and load factors, which you have done. You must know how to calculate your APP, which is adjusted posted price. You must be able to calculate that. And I think that is all you need to know under this area. So if there's no question, let's go straight to our normal computation now. So we just come back here now. I think before we go, there's other adjustments which I saw in this question. This 25,000, let's see, they said a sum of 25 million paid to another company to retrieve information relating to the existence of petroleum in the Chad Basin region of Nigeria was included in miscellaneous expenses. Okay, so all we just have to do when we get there is to less this 25 from miscellaneous, and we have the normal price we ought to have. Okay, so no issue. I will just copy all those figures we have and then paste it on the screen again. So I will pick all this. So I'm going to pick all this to make our work easier. Stop here. So I can paste that here to arrange it properly. So after that, we can start picking the figures one after the other, how it ought to be. So the first value we have here, so I'm going to write this on it. Okay, so let's call it global oil and gas. So what are we calculating? We are calculating computation of petroleum profit tax. For which year? For year 2019, based on that question, based on the instruction given to us. So I'll just put this one at the middle and then make it bold, and we are good to go. Now from here now, we have space and we have into two places. So let's look at this now. We are going to pick the higher of the two, and the higher of, so like I said, we have to pick higher of these two figures. The export figure, we have 5.7 and we have 5.1. So we are going to pick the higher, which is 5.7. Then the local sales will still remain the same thing based on what we have here. So it still remain the same thing. Other income will be treated later. So let's add these two together. Let's get our calculator ready, please. So what is the addition of these two? Addition of these two will give us what? 5.7 plus 1.3. What is the addition? From my calculator, I'm having 700, 7004, 400, then 000. So I believe this one is fine. So we add back this, what do we call it? This other income. So if we add other income to it, what are we going to have from our question? If we add back other income, what do we have? So that's 7.0. So this addition we have is the value of crude oil that was sold, both to local and the foreign. So that's why we added the two together. So let me just make this one bold a bit. So by the time you add the other income to it, what do we have? So from my calculator, adding it together here. So I'm having this figure. Now, if you look at this, you will see that the value of bar is not in this question yet. So they are yet to recognize value of gas. So we bring in the value of gas here, which we have calculated. So value of gas, let's see that from the workings we have done. So we've done that already somewhere here. So the value of gas is this, which is the load factor and the gas factor we have calculated. So we just pick this figure right away from here and paste it where it belongs to. And we are good to go. So let's add these three together now. That will be the total revenue this company made. So 7.00 plus 256 plus 1095. From my end here, the total income they make. So they made a total income of 83594600 from my calculation. Okay, so we are talking about billions here now. Let's also make this place bold a bit. Let's make it a bit bold. Now, we want to take the cost aspect of it now. So it's very simple to adjust for it. Let me just adjust for this by the side, adjust for this by the side, so that we can add all the costs together and then paste the total to remove from the total revenue, and we get our adjusted profit based on the instruction given to us. So what you have been doing since morning, we've not even gotten to the first instruction. They said we should calculate adjusted profit, which we are yet to even calculate. So we're about to start doing that now. Now, these are the cost aspects of this um, information given to us. So production cost is a direct cost and it's also an allowable cost. But we have to go back to in the information given to us. If there's any information concerning this particular figure. So let's go back there to see the information. We are looking at production cost. I think I saw something about production cost when we are working on it. Production cost. So we have one in note 4. Let me use column. So the production cost, they said depreciation of assets which amounted to this figure was included in the production cost, which is not supposed to be. So we are going to remove 240,500 from that figure. So if we remove 240,500 from that figure, what do we have as balance? So I will just put it here, minus so we have minus 240 500, I guess, 500,000. So I will close that. I hope you are right. You are correct with what you have there. So let me just put that figure. So we have 1,499,960 and 1,000. So I will need to actually expand this more so that we can have enough space to work the figure. So I want us to finish this question before 10 o'clock. Please. So if we need calculation, let's press our calculator so that we can finish it on time. So just find the difference between the two so that we just plug the figure there when we get there. Okay, so what do we have from this now?
1259.
1259. Okay.
460,000.
460,000. So we add 60,000 to that. Okay, fine. Now for operating cost or operation cost, do we have any adjustment to that? Let's go back to see if we have anything concerning that. So for operation cost, I'm not sure there's any information concerning operation cost. So there's one here for operation cost. So they said, let's see what they're trying to say. Included in other income was 76,000. I think we have picked the wrong figure. Derived from transportation of crude oil to refinery. Related expenses, which amount to 32,500, was included in operation cost. I think that one has been well treated. I think it has been well treated. Let's see that again. That have been well treated initially. So 256 was the other income, and they said transportation. So transportation is not a direct um, business of petroleum, but that transportation aspect will be regarded as other income. Then they said related expenses was also included in operation cost. So I think that figure is okay with that. So let's go to the next one. There's no need for adjustment under that second one. 186. Okay. What is the next one? We have intangible assets for drilling. So intangible asset cost is also allowable cost under this. So we leave it alone, except there is any other information concerning that. Maybe we should treat all these notes first. Let's treat all the notes first. We have done this note 5. We've done note 3. We've adjusted for that. We've done note 5. We've done this as well. Then note 6. Note 6 is talking about capital allowance. When we get there, we make use of it. Then included in management administration expenses was 7 million paid on stamp duty for the venture. We also look at that. Bad debt, we've not treated this one. The amount of donation, this one is allowable. There's no issue with this one. Then amount of 25, this one is under miscellaneous. And when we get there, we treat it. Okay, so let's go back to the next one now. So do we have anything concerning intangible drilling costs? So from what you have done, there's no information concerning drilling costs. Then not productive rent. So non-productive rent, let's go back to C. Non-productive rent. Is there any information concerning that? So I'm not seeing non-productive rent here. They said interest paid included 41 million, which was paid to an associated company. So this one does not go with it. Then 25 million is talking about miscellaneous. Then included is administrative expenses, which was 7,000 as a stamp duty. Okay, so we are good to go with that as well. So no issue. So the next one to talk about is the royalty on local sales. Do you have any information on royalty on local sales? Let's go back. No, right?
Yes, no, don't think we have.
Except if you have later. So let's continue. Let's treat all those notes first. Then custom duty on plants. Custom duty on plants will remain the same thing. So this royalty on sales is okay the way it is. Then royalty on export sales is also okay with that. There's no information concerning that. Custom duty. Let's check custom duty. I don't think there's any information on custom duty. There's no information except stamp duty. So there's no information on that. There's another aspect of it that has stamp duty. So custom duty still remain 7,8,200. Cost of drilling for appraisal wells. Now you need to also take note of this. When you see cost of drilling of appraisal well, only first two appraisal well. Hello? when you are saying cost of drilling of appraisal well, only two, that is the first two appraisal well, is allowed. So now, in this question, they are giving us 4 appraisal wells, and only two, the first two, will be allowed. So how do we calculate that now? They said they have 6 wells. And from 6 wells, what is 2 over 6 multiplied by 104 from that question? So let's press the calculator.
Around 34.67.
Yes. So what do we get?
That's 4.67 approximation.
Let's go back there. Let me show you. I'm trying to go to that question. Okay, so what do you call the answer? Sorry.
2 divided by 6 multiplied by 104 is 34.67.
And I'm not getting that clearly. That's why I'm looking. That should be 2 over 6, right? Multiplied by 208.
Okay.
2 over 6 multiplied by 208.
That is 69,600,000.
Um, let me do that. Let me check my calculator here to see. I'm not hearing properly. So 2 over 6 multiplied by 208, 800. And now that's what's supposed to have. Oh, sorry. We have 4 appraiser now. So 2 over 4 appraiser well. Then multiply by 208, 800. That will be giving us what? That will be 1044, right?
Yes.
So that's what we're supposed to do. So only 2 appraiser is allowed, not 4. So it will be 2 over 4 multiplied by this figure. So whatever we have is the answer we have. So that will be 104, then 400,000. So I believe that one is clear now. Okay, so the transportation and traveling. I'm not sure there's any information concerning that. So we are still going to look at the outstanding notes we have to see if there's any adjustment. Then salary and wages. Salary and wages will remain the same thing. But we check it. I think there is information on these administrative expenses. So let's go back and see. I hope there is. If there's no, then we continue. But let's check if there's any administrative expenses information here. I think I saw something like that.
Yes.
This is it.
Yes.
They said included in management and administrative expenses was 7 million paid or stamp duty for the venture issue and obtained by the company. I think that 7 million is supposed to be part of it. There's no adjustment to be made on that. I think it has been treated properly. There's no other cost you want to adjust it to here. I think it is well treated already. It's well treated already. So there's no need of adjusting for that 211,800. Then Abbas duty, we have 50,000. So there's no need for that. There's no information on that. Then pension. They said it is only reasonable. Let's go back there to see so that we be sure of what decision we have to take. We said this one have been treated, and this 7,000 have been treated. No issue with the posting. Then for the expenses. We have it somewhere here. Okay, this is note 9. So they said donation was expended wholly, exclusively, and necessarily. So anytime you see these three things, it means it has been certified. So that amount of donation is allowable. So let's leave it as it is. So we have 50,000 for donation, and we have 50,000 for Abbas dues. Then the next one is pension contribution. Do we have any objection to that? There's no additional notes to pension contribution. So it means it's going to remain the same thing. Now we have something about miscellaneous. So let's go back there and see that information concerning it. I hope we finish this thing before 10. So miscellaneous now, we have it here. They said 25,000 paid to another company to retrieve information relating to the existence of petroleum in the Chad-based region of Nigeria was included. So a sum of this paid to another company. So we have to remove this from that amount. So we have 25,000 minus what do we have currently? Let's see what we have. So what is different between 25,000 from this figure? 25,000 minus this figure. What do we have? 115. You said what?
The figure again.
115, 120 minus 25,000 or 25. Just say 115 minus 25.
Of 115 minus 25.
Yes.
90.
90.
Yeah.
So it means that is the miscellaneous we have. How about bad debts? There's no information about bad debts, so that will remain the same thing. Now, our interest will remain the same thing. This is interest paid. It's only interest, provision, or accrued that is not allowed under tax. But if it is interest paid, it is allowable. Then income tax provision, we don't allow provision under taxation, so you remove this provision out of it. So we can calculate all these costs together. Let's press our calculator now so that we can be fast and get ready to close it. So we have all these figures. Let's add them together. This is going to take a very long time to calculate. So let me be sure if you are adding together. So let me also add some aspects here. 1, 2 plus 1, 8. Then 5, 1, 5. 1, 8, 4. 8, 7, 580. 21, 600. 7, 8, 200. 104, 400. 56, 600. 790, 400. 211. 800, 50, 960, 50,000, 105, 179, 90, then 70, then 70. Okay, so what do we get? I hope we get the same thing anyway. I'm getting 264, 7646. Do we get the same thing? 264,7,646,000. This is what I'm getting here. So now look at this now. This figure is before education tax. All right. So there's something we always do here. So we call this one I think this figure is wrong. So I'm going to put that here. I hope you are pressing calculator, please, so that we can cross-check when we are done. Okay, so I think the total cost I have here, I hope we are right with our calculation. I'm having total cost to be 577,000 this.
Can we go to the figure?
Okay, so this is the total cost I have as at now. So if this is the total cost I'm having, I'm going to take it away from that profit I have up there, or a total revenue I have from that up there, or total income. So if you take it away from there, I'll be having profits before tax, or before education tax. Okay, so when you minus it from that total revenue or total income, which is 8359. So from my here, I'm having 264,7,647, 646,000. Okay, fine. So this is the profit we have as before education. So we now charge our education tax on this now. And how do we do that? There's a formula for that. It's always 2 divided by 102. Then multiply by the figure we have, which is 2647. Please start pressing the calculator. 647 um 646,000. So what do we have? Press your calculator, please. 2 over 1 over 108. I mean 102. Multiply by this figure.
We have 519,
Okay,
5
519
1 1 4
14
6 2 7
62 62 what?
7.45
627.
7.45.
Okay, 0.45. Let's leave that decimal out of it. Okay, so we are having 51 of this figure now. So now, for the first instruction given to us, the accessible profit we are asked to calculate. Accessible profit. So our accessible profits now will now be minus education tax. So if we less the education tax from this question or from this profit, what do we have? Just remove that education tax from it. What do you get when you less?
Oh, oh. Two,
2,
I got 259
259,
573
573,
1373.
1373. Okay, you can see that this money is actually a petroleum money. It's a crude oil money. So it's in billion of naira. So here now, we have calculated the first aspect, which is the first thing they ask us to do. So the next thing to check now is if there's any loss relief in that question, but I'm not sure there's any loss relief. Loss relief, if there's any, or if there's no loss relief, we are going to look at two things now. This is where we are going to check or make use of our allowance that we calculated earlier. So it's going to be in two forms: capital allowance so it's going to be lower of 1. The capital allowance we brought forward, which was given to us, capital allowance brought forward. Then after capital allowance, we also have the annual allowance, which we are going to check. So annual allowance. That is AA that we have at the first one. That is the brought forward capital allowance addition we have in that year. Then we are going to look at the other one also, which is our PI, that is petroleum investment we calculated. We are going to calculate that one and bring it here as well. So let's go back to that aspect. What is the capital allowance brought forward from the question? This is almost 10, oh, Jesus. Okay, so capital allowance brought forward. We have 67, and they said agreed capital allowance for the year was 177. So we are making use of these two figures. So we are making use of this figure. Once you see agreed, you pick the agreed. We have annual allowance here to be 163. But because there is an agreed capital allowance, we are going to pick the agreed capital allowance. But if that agreed capital allowance was not given to us, we will use this one we calculate. But since there is agreed already, we have to obey the instruction by picking the agreed figure. So we have 67,400 based on that question. Then I think the other one is 177, if I'm right. Agreed allowance is 400, Abby.
The 117.
Okay, 00. Okay, so I think we are good with this. Now the PI. So we are going to bring the PI we calculated, which is 88 something, 88, 850. Yes. So we are bringing that here. So 88, 850,000. So let's add the three together. What do we get? Let's add the three together. What do we get?
Are we adding everything up?
Yes, add everything up. What do we get as total?
We have 33 triple
Three,
three,
three.
that's 333.
Okay.
333.
Yes, I've written that.
250,000.
333 what?
250,000.
250,000.
250,000.
Okay. So this is the first part as allowance is concerned. Now the other aspect is the other aspect we need to test. That one, this figure we just got now is what we call balancing allowance. Okay. So the big part now, which we want to calculate, there is a fixed percentage, which is 85%. So we are going to calculate 85% of accessible profit. Of accessible profit. And if we calculate 85% of accessible profit, what do we get? 85% of accessible profit. So let me put it in the brackets. That would be our accessible profit is 259 259 259. Okay, so we have this figure 258, or is 25 let me see that figure again. I think it's 259 2595 2595 731 373. So that is the figure you want to multiply A with. So this and this. Okay, so please let's multiply. What do we get when you multiply it together? 85% of this figure will give us what? If she's still in the class, or let me press my calculator. So 85% of this figure is giving me 220 6 37 166 7. So that is the first one. Then we also adjust for that less 170% of PI. I believe we still know our PI. So what is 70% of PI? Our PI is, let me put it in brackets, 88, 850,000. So this is our PI here, which we calculated. So what is the 175% of that? So we are going to less it from here. So 175%, 170% of our PI will give us 151 043 00. Based on my calculation, please cross check and make sure you are all right with it. Okay, so we have calculated this aspect, and by the time we minus these two from here, let's see what we are going to get. We have 206 minus 51. It's finding difficult to comment. So I'm having 2055 326 667. Okay. So the rule is to pick lower of these two. So we have to pick lower of the two based on this instruction. So which one are we going to pick?
67,400.
Okay, so no, what I'm saying is we have two here. This is 133,250. And let me put it where. And this is another one here, which we have to pick. So from this, between this and this, we have to pick one, which we have picked already. And that's why we are picking this figure minus this API. And we are getting 2055 our final answer. So this one we get now is our chargeable profit. And what do we need to do? So we call this chargeable profit as requested for chargeable profit. Okay, so to get our chargeable profit, it's going to be accessible profit minus our balancing allowance. So from there, we apply our tax to that. So let me just do that one under here for us to see that. So we have 2595 as our taxable profit. So let me put it somewhere here as a guide when you are checking this note. So we have accessible profit, then minus balancing allowance. Okay. So we are fine to go with that. So what is our accessible profit? Our accessible profits from onset have to be 2595,731, which we have calculated 375. Then minus our balancing allowance. And what is our balancing allowance? We have 33250. So 33250,000. So if we find the difference between these two, what do we get? If we minus it, what do we get?
255,573.
Minus 33250.
Okay, 23. We have two 2262.
Okay.
481.
481
375.
375. Okay. So this is the chargeable profit, and this is what we are going to apply our tax on now. So it's going to be accessible tax at 85%. So let's calculate what is 85%. This is the last calculation we want to get now. So what is 85% of this figure?
1923.
1923.
109.
109.
169.
169. Okay, thank you. So these are the figures we have been looking for since morning. And these are the things they ask us to calculate in that question. Chargeable profit, which we have calculated. This one can be light mode, then adjust accessible profit, and then the total profit, which we have done so far on this one. This is accessible tax at 85%. So that is the end of that question. That is the end of that question. So let's start from A. What are we going to have? So whatever you learn, once you learn it from there, so you get your total balance on that question. And that is where we are going to stop for tonight. So if there's any question, please let us know so that we can treat it within 6 minutes so that we will finish it by 10:20. So if there's any question, let us know from this example. So this one I've been able to treat every aspect on oil and gas. Ican cannot set question more than this because this question is a standard question. So we have done the formulas for gas factors, and I believe this formula is now clear now. Though we we found it from the way how to how to arrange it to make it more simple or clear to us. Then we have calculated the adjusted posted price, and then the gas sold, which is gas factor and the load factor. And that will be all for now. So let's see next time if God permits us. So thank you so much, and let's see you next time.
Thank you.
All right. The question is very long question.